What's up, everybody? Well, it's that time of year where everybody puts out their predictions and their forecasts for 2023. So today we're going to take a look at Zillow's and Realtor.com's forecast for next year and see if we agree with them. So let's just dive right in. Zillow's first bold prediction is that the Midwest will feature front and center in 2023. They start off by saying how Florida dominated the annual appreciation leaderboard in 2022, with Tennessee, the Carolinas, and Texas metro areas taking the top spots among the 100 largest metros. But for 2023, Zillow predicts that the trend will turn to more affordable places to live, and the Midwest will have the healthiest housing markets next year. They note that home prices in most Midwest metro areas haven't run up to the extreme like other parts of the country. For example, mortgage costs as a share of income are still within healthy sub 30% levels in Ohio, Pennsylvania, Kansas, upstate New York, Iowa, and smaller metros in Illinois, which will allow first-time home buyers to take the plunge. They also point out that inventory is higher in these Midwest states and declines in new listings are smaller than the national average, encouraged by the more consistent demand from buyers. So this sounds like great news if you have to move to the Midwest for work, or if you could work from home, or if you already live there and you're just thinking about buying now for the first time. But if you're not in any of these situations, this just may not excite you very much. No disrespect to the Midwest. I actually went to college in Ann Arbor, Michigan, and I loved it. But the Midwest just doesn't have the appeal as the Sunshine States as far as lifestyle. But hey, you tell me, are any of you out there thinking about moving to any of these Midwestern states that we mentioned? Let's move on to Zillow's second bold prediction for 2023, which is buying with friends and family will gain momentum. Okay, this is interesting. Zillow said that they did a survey in the spring that found among successful recent home buyers, 18% had purchased with a friend or a relative that was not their spouse or partner, and 19% of prospective home buyers intended to buy with a friend in the next 12 months. For both groups, affordability and qualifying for a mortgage were the top reasons citing for doing this. And we know that rates have gone up even more since the spring, making buying a house even more unaffordable. According to Zillow, mortgage payments for a typical U.S. home rose from needing 27% of median household income in January to 30% in March to 37% in October, far beyond the 30% threshold where housing becomes a financial burden. Now, I'm not saying this isn't true or necessarily a bad idea, but I personally have not seen this trend in the past year. I have seen more gifts from family to help offset the cost of buying a house. I just haven't seen anybody co-buying with a friend or a family member. And while this may offset some costs, I just can't imagine that it wouldn't also cause some potential problems. Buying and owning a home is a lot and can be very emotional and life-changing. But what are your thoughts? Do you think it's a good idea to buy a house with a friend or a relative? Definitely comment below. So on to Zillow's third bold prediction. Affordability crisis will stabilize, if not improve. So Zillow states that affordability, the share of median income required to pay housing costs, is the biggest challenge for buyers, sellers, and renters today. This is all very true. We know that the monthly mortgage costs have doubled since 2019 due to the crazy escalated prices coupled with the super high interest rates. Zillow continues to say that high mortgage rates are not only pushing buyers to the sidelines, they're stopping new inventory from coming on the market as homeowners decide to hang on to their current houses and low rates. This is also true, and renters aren't exempt from this madness. Rents have grown faster than wages, making it really hard to save up for a down payment. The average hourly wage has grown 23% over the past 5 years, but rents are up 37% during that same time period, after a pandemic era surge. So far, I agree with everything, but here's where I get confused. Zillow says that they expect national home values to remain relatively flat next year, and mortgage rates show small signs of easing tightening and volatility in mortgage rates could continue through early 2023. So how does this equal to the affordability crisis stabilizing or even improving? Because if home prices remain flat, they will still be way too expensive for most buyers, especially if mortgage rates only show small signs of easing. I'm just not sure if this is simply clickbait, but it just doesn't make sense to me. Let's continue. The fourth bold prediction from Zillow is there will be a surge in first-time landlords in 2023. In this prediction, Zillow states that a lot of people, especially mom and pop investors, bought a second home in 2020 or 2021 when rates were super low. They say that as rent growth continues its aggressive pace, many of these second homes have an even better potential to yield regular rental income above mortgage payment fixed with record low rates. So basically their philosophy is that these now investors will keep their second home and rent it out for income rather than use it themselves or sell it. The potential for regular income, bearish expectations for stock markets in 2023, and the big pullback from home buyers due to higher mortgage rates may reinforce the incentive to hold on to these investment properties, especially in areas like the Midwest Sun Belt, where household formation and housing demand is stronger. Sure, maybe. I mean, if you did buy a second house and you wanted to make some money, I could see renting it out and getting some income. But in my experience, people that can afford to buy a second home and bought one without ever intending it to be an income property usually don't suddenly want to be a landlord. But I guess we'll just have to wait and see on this one. And Zillow's fifth bold prediction for 2023 is new construction strength will be in rentals. Here, Zillow predicts that builders of multifamily units will increase production to meet the demand of renters, since buying a house right now is simply unaffordable. They do admit that demand is low for new construction of single-family homes, and that builders right now are lowering their prices or offering incentives or even buying down the interest rate for potential buyers. But they say that builders of multifamily units are in contrast more bullish. Elevated multifamily permits also point to a strong vote of confidence in continued demand for rental units despite looming recession fears. They think this confidence will encourage more construction of build-to-rent homes, as many would-be homeowners will need to continue renting into later life because they simply can't afford to buy a home. Well, this just makes me sad and totally contradicts their third bold prediction, where they say that the affordability crisis will stabilize if not improve. You can't have it both ways, Zillow. Either you're predicting the market's going to get better and more affordable, or it will get worse.
Well, I wish you guys would make up your mind.
And that's the extent of Zillow's bold predictions for 2023. So what do you guys think? Do you agree with them? I don't know. In my opinion, they really kind of missed the mark on a lot of things. So let's pivot to Realtor.com's predictions for 2023. They're much shorter and succinct, and we'll just go through them really quickly. First, they talk about mortgage rate. They predict a 7.4% average, 7.1% by year's end. They predict the median home price appreciation will be up 5.4% in 2023. So they think that home prices will appreciate next year, just at a slower pace. Just to give context, the existing home median price appreciation was 17% in 2021 and 6.4% for the 2013 through 2019 historical average. Their next prediction is that existing home sales year over year, annual total, will be down 14.1% to 4.53 million. The 2013 through 2019 historical average is 5.27 million. Existing home for sale inventory year over year will be up 22.8%. This is a very big change. But even if inventory goes up 22.8%, it will still lag 2019 pre-pandemic levels, according to Realtor.com. The level of inventory in 2023 is expected to fall roughly 15% short of the 2019 average. In fact, October of 2022 was the first time inventory climbed back to its 2020 level for the same time of year. Single-family home housing starts will be down 5.4% to 0.9 million. And rent growth will be up 6.3%, which is not surprising since it's simply not affordable to buy a house. The bottom line is they think that there will be more homes for sale, homes will likely take longer to sell, and buyers will not face the extreme competition that was commonplace in the last 2 years. However, affordability challenges prevent 2023 from becoming a major buyer's market, especially for first-time home buyers who already faced significant obstacles. So that's what Realtor.com is saying. Now, as I always say, real estate is very local and these are national predictions, so it will differ from market to market. But I am curious, what are your thoughts? I mean, they're saying that they don't think that it will be a buyer's market next year and that they do think that home prices will continue to appreciate. And I know, because I read your comments, that a lot of you strongly disagree. So these are their predictions. We went through Zillow's and we went through Realtor.com's. Now, comment below, keep it nice, and just tell us what you think and let's have a conversation about it. Personally, like I said, real estate is very localized. I can certainly comment on where I work in the DC area. I do think it's still going to be a very tight market, especially with good houses, meaning a seller's market, because we just still don't have enough inventory. And that's what I'm experiencing right now. I'm still experiencing multiple offers right now at the end of 2022. But I guess we'll see. I hope you guys got some value out of today's video. It is a lot of work, but I really think it's important to bring you the most up-to-date information so you can make the best decisions for you and your family. If you did get some value and you want to show our channel some support, definitely smash that like button, comment below, and consider subscribing to our channel. It just motivates us to make more videos. Thanks for watching. I do appreciate it. Bye!